The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here on a Friday, and as we head into the weekend of what really has been just a quiet summer doldrums kind of week, you still get pieces like this from Yahoo Finance because, look, actually this is from Reuters originally, but Yahoo Finance picked it up, and you get sentences like this. Investors head into next week weighing familiar concerns over interest rates, inflation, and geopolitical tensions against another robust earnings season that continues to keep stocks supported. So here's the thing, like, this week, I told people heading into this week, like, it's not really worth getting out of bed for. And by the way, love to toot my own horn occasionally, was right. Like, there hasn't been anything interesting that's happened this week.
No surprises. I mean, data came out, but no surprises. Yeah.
It's been a forgettable week in markets, which is fine. Like, and quite honestly, if you look at the calendar the next couple weeks, take the rest of the month off. Take the rest of the month off. I'm completely serious. Like, you look at what's coming next week. Tell me if any of this gets you excited, Mike. On Monday, New York Empire State Manufacturing Index.
Listen, Chuck, I'm going to have to speak about it for a combined 10 hours. So yes,
I know this is our job.
Very excited about it.
You can't do that, Michael, because then when something important actually happens, nothing can be important if everything's important.
Yeah,
so
right. I don't care about Empire State Manufacturing.
I tell people the truth.
I'll find something else to talk
the
about.
The NAHB Housing Market Index, forget about it. Okay? Building permits and housing starts.
What about retail sales this morning?
Even that. Forgettable. Like, we'll get to it. It wasn't good data, but it also doesn't matter, is the point that I'll make. And should we discuss retail sales?
Yeah.
Okay. Retail sales were bad. It was, again, just not a good month for retail sales for July. We saw the headline number come in down 0.6% versus consensus estimates of 0.1 to 0.3% growth. Ex-autos down 0.3%. compared to consensus estimate of 0.2% growth. Ex-gas and ex-autos down 2% compared to expectations of 0.3% growth. So a bad retail sales number.
No matter which way you cut it.
Here's why I say it doesn't matter. Michael, what's happening to the 10-year Treasury today?
Don't know. Haven't looked.
No, you should. You should.
Is it blowing out?
No, not blowing out, but I want you to take a look at it.
Okay.
Not going to do your homework for
sitting
you.
at 4.662. It's up slightly.
It's up slightly. Mike, does the 10-year Treasury normally move up when retail sales have a bad miss?
No. Generally, we are a consumer-focused economy, and investors take a bad retail sales number as concern about the consumer.
So, again, it didn't matter. That's the point I'm making, is the market, whether you're talking about, like, the actual data that's coming through, which, again, most of the stuff just doesn't matter next week, like, is anyone going to get all excited about FOMC minutes?
Yes.
No.
Actually, there's been some drama. I mean, we've been talking about how it's, keeping up with the what was the, didn't we come up with a reality show name for the new Federal Reserve?
Keeping up with the Bernanke's? No. Keeping up with the chairman?
Yeah, I don't remember what we came up with. But, yeah, there's been some fireworks, so maybe get something exciting there, but probably not.
You know, like, and again, like that is the most exciting piece of data next week.
Fair.
There's just nothing on the earnings side next week. We do get a couple companies that are like kind of interesting. You got Home Depot who's going to be reporting. You got Lowe's, TJX, so you're going to get some retail color. Walmart will tell us what's going on, but again, not much usually happens in August once you get past like the first couple weeks. And I checked the date today. It's August 14th.
So, Chuck, I have a question then.
Yes.
Interest rates aren't moving down on a weaker than anticipated retail sales report, as you mentioned, when economists and investors get worried about the consumer. They tend to get worried about the economy as a whole because traditionally we are an economy that relies heavily on consumer spending to juice it over time. Why not this time?
Because the economy's fine. Like I know no one wants to hear that because everyone wants to always like the smart thing is to be like, or the way to sound smart is to be like, well, I'm so concerned about this and about that. Guys, here's the deal. Inflation's high, consumers are stressed, and it still doesn't matter to the economy.
I was going to say that this moment, unlike most others since at least I've been doing this program, the economy is not being defined by the consumer in the same way.
No.
It's being defined by capital expenditures on behalf of giant corporations, which is really new.
It's something where, well, that plus, again, the deficits that you have on the federal side. How do you have a recession if you're running 6% federal deficits in, like, a good economy while CapEx is ramping up at the pace that it is right now? Like, I don't know how you have a recession in that situation. Now, if the CapEx situation changes, if we decide to suddenly become, deficit hawks, okay, like, yeah, now we can talk about recession. But people just love to think that recession is always just around the corner. And don't get me wrong, eventually it will be because we haven't seen our last recession. But what matters is the directional impulse from different types of spending. And if retail spending's pulling back a bit, okay, like, yeah, I'll at least note it in there. But it's going up against this tidal wave of federal spending and AI-based CapEx, and the negative retail impulse has to be bigger than just 1 month of bad numbers here. I think that's the point that I'll make. So I'm not sitting here trying to, blow sunshine and tell you, like, everything's perfect. What I'm telling you is that we have these flaws in the economy. We do. But the amount of spending that's going on is just enough to mask it, because we're not talking about getting more, fiscally hawkish. We got new tax plans being floated this week that are talking about, like, raising the capital gains exemption on personal residences to what, like $2 million or something?
Yeah. So yeah, we're not going to suddenly become deficit hawks. I'm also unconvinced in this moment in time that a weakening consumer, even for the next several months, would mean much of anything for state of GDP or the stock market or anything else. I don't know.
It would depend on the magnitude. Like, I'm not going to sit here and tell you, like, hey, if, like, the consumer gets way worse, everything's fine.
Of course, but there's not really a path for that to happen. And even if they weakened a little bit, what might have been a bad signal in the past, I'm not sure would give you the same signal in this economy.
Yeah, and look, the underlying data on consumers is that incomes at the lower end of the wage spectrum are now moving up in line with other workers.
See you later, K-shaped economy.
Right, we're no longer K-shaped. Now we're like, now we're like an M-shaped economy.
What?
An M-dash? The long dash that everyone identifies with AI, even though it's actually one of the best writing tools that you can use as someone who enjoys good grammar. It's one of my biggest regrets about AI is that it takes useful and unique pieces of grammar and has commoditized and ruined them.
Yeah, it's one of the easiest ways to detect AI writing is.
Which the problem, like, I love
it.
using dashes. Like, it's something that I've enjoyed for a while. You can go back and look at my writing from 10 years ago, and it was just, they were proliferating pieces. They were everywhere, and probably too much to a certain extent. But that, and what punctuation mark is very underappreciated and underutilized?
The upside down exclamation point.
Nope. The semicolon. I think that the semicolon is, it's kind of like the fullback in football.
Right.
Where it's fallen out of style, but still, if you use it appropriately,
Well, no one knows how to use it.
it opens up all kinds of possibilities.
fullback
Just
or
like
the
a good
semicolon?
fullback. Both of them. No one knows how to use a fullback. Everyone wants to be, oh no, it can be another pass catcher. No, you use that fullback to open up possibilities for the rest of the words on your team.
Semicolon's like kind of a period, but it's not, and it might be
Well, it's not a colon. It's half a colon. That's exactly right. It's the top half. It's kind of like a centaur for punctuation.
Yeah, I've never
The
known.
top half is a colon. The bottom is a comma.
Right.
I'm just going to use it all the time, though.
So,
In conclusion, retail sales this month don't really matter. Let's take a quick break. When we return, let's talk a little bit about what we're seeing in the bond market in a little bit more detail.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
If you missed any of our shows from this week, you can simply find them on our YouTube page. We stream the show live every day, but also archive every hour and highlights of the show. So all you have to do, go to YouTube, search for the Financial Exchange Show, and be sure to hit that subscribe button.
Peace in Bloomberg here. Costliest U.S. bond sale since 2001 is investor warning to Besant. So here's the deal. Yesterday, there was a $25 billion sale of 30-year U.S. bonds. They priced at an interest rate of 5.216%, which is the highest interest rate on them since 2001. And basically it's saying, okay, like this is, causing, it's what we're seeing now because yields have gone up. It's influencing government borrowing costs, and it's taking up more space on the budget, which then in turn, because we're not raising taxes and we're not cutting spending, makes the deficit bigger as borrowing costs go up. So you get kind of this cycle that can happen sometimes in certain countries. Hasn't really happened in the United States. And remember that ultimately, long-term bonds are determined basically by what investors think the path of short-term rates are going to be during that time. You can do a process called bootstrapping, where you basically go out and figure out, okay, what is each year's interest rate that's priced into the market going out for 30 years, and that's how you eventually get to what the 30-year yield is. So it is clear that the Trump administration and every administration before it, they pay attention to what bond yields are, like everyone in government does, because it's something that does matter to a certain extent. It hasn't mattered as much in the United States because we are the world's reserve currency with the dollar. And so as that, there's basically been an unlimited appetite for U.S. debt since World War II pretty much. But it is something where, we've talked about it. Hey, at some point, maybe this becomes a problem that actually starts to matter in different terms to the United States. But right now, it's more of a nuisance than any meaningful problem that has really developed.
Chuck, a few times in the last several years, rises in interest rates have been, or increases in interest rates have been put on the doorstep of, or blamed on, giant deficits, and finally the deficit hawks coming into the bond market. And we have seen an uptick in interest rates again this time here. Since June, we've seen rates shoot up from 4.4 to where we are now. Since the beginning of the year, it's been more severe. It's not that nobody's talking about deficits, but I don't think I'm ready to jump to the idea that, oh yeah, interest rates are heading up right now because people are concerned about deficits. There's a few other things going on here that might be affecting this, one of which would be the war in Iran. The second might be Kevin Warsh and the Federal Reserve and his actions or lack thereof on inflation.
Sure. And so, look, the point that I'll make, hey, the 30-year Treasury has gone from around 4.85% at the end of June to 5.24% today. So if you're going to tell me that that's all about deficits, then here's the question that I'll ask you. From mid-May until the end of June, the 30-year Treasury went from 5.19 down to 4.85. Mike, did the deficit picture meaningfully improve during the latter part of May and early part of June?
Not that I recall, no.
No, it didn't. It continued to get worse, just as it has for the last 25 years.
Where are we running right now in terms of...
Mike, we're going to cross $40 trillion in the next week.
Ooh, that's...
$40 trillion,
disgusting.
Right? What's a few trillion amongst friends, man?
Deficit to GDP for 2026, what are the estimates now?
High.
Yeah.
In terms of the annual one?
Yeah, I mean...
5.8 to 6.2%.
Okay. So I just want to point this one out again. No president has been serious about deficits and fiscal discipline since the late 90s, early 2000s. That's the last time I think you can claim any sort of severity, and it has gotten really significantly worse over the course of the last decade. And so I was, again, sitting with somebody who was yesterday complaining about the previous Biden administration, and plenty there to complain about, but one of them was, and plus he was running those giant deficits. And I did have to step in there to say, that's true, but that has not improved at all under President Trump.
No, here's the deal. If you want to be serious about deficits, you have to do one of or a combination of 3 or 4 things. Number one, you got to cut Social Security and Medicare.
Mm-hmm.
Is there a lot of appetite for that?
Not from what I've seen.
No, we what was it? A year ago or 2 years ago, we went the other direction.
Yeah.
We bumped up. Actually, you can make a case. We've done a couple things on the Social Security and Medicare side that have made things worse in the last 2 to 3 years.
Yep.
Number two, you've got to rein in defense spending. Do we get a sense that's happening?
Quite the opposite.
No, we don't.
Yeah, by the way, that Social Security piece, one of those actions was by Biden. One of them was under Trump.
Yep, it's again like this. It's not like in either or situation. It's like just how it is now.
We claim to have all these big disagreements, but we seem to do the same exact thing regardless of who is in power.
Next one, higher taxes. We going to do that?
Certainly not from what I've seen.
No. Instead, what we did, we did the whole Doge, dog, and pony show that ended up cutting basically nothing from the federal budget. And we're stuck now with these 6% deficits because we're not going to address the actual drivers, which are Social Security, Medicare, defense spending, and the lack of additional tax revenue because we keep cutting taxes instead.
Mm.
And so if we're not going to be serious about either side of the ledger, then it's not even worth the conversation, quite honestly.
Yeah, it's not.
It's
well,
just...
actually, that's not true. It is worthy of the conversation because if we continue to just let our elected officials do nothing about this, then to your point, someday it's probably going to blow up in our faces. I have no idea when that will be, but it probably will. Maybe not during my lifetime, but I don't really want to do that to my children.
Well, the good news is that the new class of incoming senators who are elected this fall, they will be the first members of Congress or the executive branch that are guaranteed to have to deal with the Social Security problem.
Yeah.
So, good luck in those races. It's on you.
I guarantee it doesn't even come up in debates.
No, when's the last time anyone talked about Social Security? This is the thing. Like, no one even...
Certainly didn't come up in primaries.
Here's what's going to happen.
Probably not going to come up in the regular election.
We're going to get to December of 2031, and all the pieces are going to start being published next year's when Social Security runs out of money. Okay, got it. We're going to do that whole thing through the spring, and then like July 5th, right after 4th of July in 2032, it's going to be like, oh no, we've got to actually do something before like the Senate's August recess. And so the law that's going to end up getting passed is, well, even if Social Security runs out of money, we can pay for it.
Of course it is. Kick the can down the road further.
This is where we are going on this. Tucker, you can put that on the sticky note wall. Let's take a quick break. When we come back, we got Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699, or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1-mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Navigating Retirement Housing Choices. Mike, as you get towards retirement, what are some of the considerations for whether you should stay in the property that you've been in for a while or consider moving to a new one?
To me, for most people, they come down to 2 factors. One would be financial, and 2 would be quality of life. And so, first things first, right? I mean, you're heading to retirement. Did you do enough saving to be able to afford to live in the same place you did, with or without that mortgage, with where property taxes and insurance costs have been going? So that's probably number one. But the one that people kind of start to forget about is the quality of life. And so how close am I to family? How close am I to health care? And am I going to be safe in this house 20 years from now from a healthcare perspective?
It seems like for most people, they're going to have different priorities as far as which of those come first. So it very much is not, here's what you do, but more, here are the things you need to consider, and then get to your own conclusion.
Yeah, but I think it's important that people think long-term on this, right? You do not want to make this decision twice. And so very often we do see that happen. Hey, I'm moving here because of taxes, and I didn't think about the other qualitative lifestyle pieces about that move.
Folks, our guide is titled Navigating Retirement Housing Choices. There are 2 ways to request it. First, you can call 800-393-4001. Second, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets trading slightly lower, following weaker than expected retail sales for the month of July, where sales pulled back 0.6%, the most since May of 2025, as consumers pulled back on purchases at online stores and auto dealers. Right now, the Dow is down about 0.1% or 68 points lower. S&P 500 also down 0.1% or 8 points lower. NASDAQ down 0.25% or 69 points lower. Russell 2000 up about 1/3%. 10-year Treasury yield up 2 basis points at 4.67%. And oil up about 1/3%, trading at $81 a barrel. 2 years after its IPO, social media platform Reddit is officially joining the S&P 500, replacing Avalon Bay Communities on August 18th. Reddit jumping nearly 14% on that news. Meanwhile, Applied Materials posted higher quarterly net income and increased revenue. However, the sales within its key semiconductor systems division only narrowly beat expectations, seemingly disappointing investors as shares are now down about 5%. Elsewhere, Workday down 5% after its 18% rally yesterday on the heels of a report from Reuters that private equity firm Silver Lake was in talks to buy the company. And online furniture retailer Wayfair was upgraded by Bernstein, citing its high single-digit revenue growth in a stagnant furniture market. Wayfair stock is up about 3%. I'm Tucker Silva, and that is Wall Street Watch.
Mike, do we want to talk Middle East or big tech?
We can do Middle East really quickly. The U.S. is about to impose, quote, unprecedented economic isolation on Iran. A lot of what we've said we are going to do to Iran is supposedly unprecedented and hasn't worked yet. So I'll wait till I see some of the details.
Yeah, we'll see what comes out. I mean, Iran has been probably one of the two most heavily sanctioned and isolated countries in the world over the last 20 years. So it's unclear exactly what we can see that's, a further move towards more economic isolation absent, secondary sanctions on countries that buy Iranian oil and products, which I just don't know if we're going to go there. So we'll see what ends up coming out of this and see what develops here. But again, it's not to say that the Iranian economy is good. It's most likely very, very bad right now. The case that I think I would make is it hasn't exactly been very good for a while.
Started at a pretty bad point.
They're kind of used to running the country not with a good economy, and we'll see, exactly what is on the table next week.
I'll make the point that if you do not go and sanction foreign countries that buy Iranian oil, then the, quote, unprecedented economic isolation plan that you have is not an unprecedented economic isolation plan. It's fundamentally unserious unless you go after those.
Yeah, because the oil is the only thing that matters to the Iranian economy.
Correct.
Yeah.
What are you going to do?
How big tech earnings are inflated by other tech companies. So if you are a company called Amazon, you might have bought a stake in another company called Anthropic. And what that means is that based on being able to mark that investment to market when you have, different fundraising rounds and things like that, it can show up in your earnings as part of your profit, even though it's not really money that you earned from your core business. It's rather just an investment that you have that has gone up in value while you continue to hold it.
Yeah, so a lot's been written about, this most recent quarterly earnings and some of, if not the single best earnings that we've ever seen in the S&P 500. I don't think you necessarily need an asterisk next to that, but I do acknowledge here that, some big chunk of this is the markup of privately held investments that may or may not end up being worth what they are being valued at today. And another huge chunk is a whole bunch of new assets that these companies are building or acquiring that will need to eventually be written down with depreciation that we're all somewhat unclear on just how much depreciation there will be under what time period.
Yeah.
Is that an appropriate summary, I guess, of the state of tech earnings in the U.S. right now?
I think so. It's not to say that these aren't, this Wall Street Journal piece makes it seem like these aren't real earnings, and they are. It's just they're a different type of earnings than you typically see from a tech company, and they're not necessarily repeatable because they're not actually related to the company's own performance in its core areas. But it doesn't mean that it's not there. I think the points that are raised here is, look, there is no set standard for valuation on these privately held investments. And so it is something that is subject to, change, especially if these companies end up, if Anthropic goes public or things like that, that can, impact things. So, yeah, it's something worth watching. but it's also like it is real, even if it's just in a different format, and it doesn't mean that something bad is inherently coming in the future because of that. It means it might if the value of those things go down, but if the value continues to go up, then that's fine too.
One day you're living in your own home, the next you can't return home after rehab. Now you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major financial decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be a risk, and why the first answer you receive isn't always your only option. Call right now at 866-848-5699. That's 866-848-5699 to get your free copy, or you can request the guide online at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Chuck, I want to go back to this, the one-time gains and the story of big tech companies and their earnings for a moment here, because I found that last statement that I made to be rather dissatisfying. Like, might be a problem, might not. What you can say about giant tech companies today is that they have inexorably tied themselves together. Right? And I don't know if that's in an unprecedented fashion, but you think about all the stories we've covered recently about how NVIDIA is going to invest in XYZ company in exchange for them buying their chips, and Alphabet owns all of these privately held companies. NVIDIA wants to create asset-backed securities on, I guess, semiconductors that are running AI models. This happens plenty of times during, wild market periods of time. But these companies, much like other, and I guess I go back to the banks because that's the major crisis that I've lived through, but these companies have all tied themselves together in these sometimes tough to understand ways for the average investor. And they are right now benefiting from each other's successes. And should there be some dramatic failures in the future, which, let's be honest, if there aren't, this would be the first period of, technological boom that doesn't result in a bunch of failures.
Yeah.
Then they're going to bear the weight of that too. It comes with both the good and the bad when you tie your financial successes to other companies and their growth plans.
Yeah. Look, maybe it's just like it's Friday and like I just want the weekend to start, but I just can't get that excited about like, oh, this bad thing might happen in the future. Like,
yeah, I'm with you.
I'm tired of doing that.
Yeah, I don't want to create these doom scenarios. That might happen. I think everybody's mostly eyes wide open to it.
Like, no one's going to be surprised at this point if something at some point goes badly with the AI rollout.
Yeah.
Like, oh, who could have seen that coming? Like, we've talked about it ad nauseum at this point. I can't do an hour of AI. Like, it's just like there's nothing new that's happening. Oh, we built more data centers. Great. Are they being used? Yes. Okay. Like, I don't know. When it becomes a problem, it'll become a problem, but I'm just not sure if there's any more like meat there right now other than just people being upset about data centers. I do think there's something interesting. I was reading a piece from Dave Nadig yesterday. He's a big ETF structure guy. Like he knows more about how ETFs are actually built, like the underpinnings and the plumbing of them, than anyone I've met. And he went to this investor retreat over the, I think it was last weekend or maybe last week. And it's at like this camp in upstate New York or something. So it's, all like disconnected, blah, blah, blah. And I forget who it was, but some, big hedge fund manager got up and started a speech. He goes, I want you all to know that, like, I wrote this myself. It's not AI. And everybody cheered. And he made the point, he's like, isn't it really interesting that, in our businesses, everyone's like focused on like AI related growth, and, everyone's talking about data centers this, and everyone, Chat GPT's that and Claude's this. But then whenever you hear someone say, hey, this is like my work and not AI, everyone gets really happy. Because everyone freaking hates AI. Like, you hear someone say, like, I wrote this myself, and immediately you go, oh, now I'm interested. Because, like, we're just, we don't like it. And I don't know why we don't like it, but we don't. And that's really interesting that you have such a popular technology, just like social media, that everyone hates. Yeah. Like, what's the last, like, mass adoption technology that people actually liked? Where they're, like, not just, like, using it because they have to, but, like, hey, I love this. Like, this is great. It's probably indoor plumbing.
I like that.
Right? Love that.
Big fan.
I'll give this a little bit of thought. And
the dishwasher, probably right up there as well, and linked.
A personal computer?
Personal computer, yep. I'll put that up there.
No, we ended up hating that.
Do we? Why do we hate computers?
I mean, how can you say you hate that, Mike?
Who hates their computer?
I guess
computer.
I guess I hate the email that comes on the computer.
Right, like that's not the computer.
That's email.
That's the internet. That's a separate invention.
Yeah.
Tell that to my Minesweeper.
Yeah.
Exactly. Thank you, Tucker. I appreciate you, MS-DOS.
Solitaire.
That's what you're doing back there?
No,
three computer
screens. What do you think I'm doing here? Yeah. I got Minesweeper in this computer.
The third is
he always seems so distracted back there.
And then I got Snood over here. Yeah. That's what we're doing back here.
That's why occasionally we got to go to break when Tucker's down to the last mine.
Constant games of hearts going on behind the computer.
Is Solitaire the one where when you win the cards?
Yeah, they like celebrate and go all over the screen.
That was always a great moment.
Question? Okay, yeah, let's go.
That was good. Let's take a quick break. When we come back, let's talk drones and how much fun Boston was this summer.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Who wants to play golf to support the Disabled American Veterans Department of Massachusetts? I know you do.
Let's do it for the DAV.
Mark your calendars. Monday, August 31st, Granite Links, Quincy, Massachusetts. A full day of golf and entertainment, and all to raise money for the Disabled American Veterans Department of Massachusetts. Let's go. DAVMA.org/event.
Let's do it for
DAVMA.org/event.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years, when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years, when convenience starts to matter more. And eventually the no-go years, when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show.
Piece here in the Wall Street Journal. President Trump announces drone tariffs to bolster U.S. supply chains and counter China. I'll quote here. In a statement, the White House said the drone tariff program would protect the security of the U.S. and its defense and defense-adjacent industrial base while creating jobs. U.S. drone production needs to be expanded rapidly to ensure U.S. national and economic security. Got to tell you, I would go a step further than this and just, ban any Chinese drones from being imported. Call it a day. Do you want Chinese drones to be able to be imported into the United States, Michael? I don't.
No.
There's no good use case. There's no good reason. There's plenty of use cases. There's no good reason to allow that given the risk that exists.
I'm actually not sure I get there. I mean,
continue.
The average drone I don't think I see as a danger. I see this as, hey, let's protect what is going to be clearly a military necessity in the future in terms of bolstering the U.S. drone capacity. But the average drone that my neighbor uses to take pictures of the Charles River, is that a danger to us
Yes.
here in the United States?
Yes.
How? What's going to be done with it?
What do you mean what's going to be done with it?
Yeah, what's the danger? Spell it out for me.
That any of the pictures and use data from that could be going back to China.
How's that different from a camera that I can buy online?
It doesn't fly. The camera doesn't fly
yet.
I don't think you should allow Chinese-made drones in the United States.
Don't most of these drones' operating systems just connect to your phone?
I have no idea. I don't own a drone.
Yeah, I don't either. But I'm fairly certain that's all they do is they just literally connect to your phone and send all
that doesn't make me feel good
onto your phone.
So now I've got a Chinese drone connecting into my phone. That's supposed to make me feel better?
Yeah. Look, I'm just kind of on this slippery slope argument that we've had several times with any Chinese-made technology, which is okay, it's basically any technological product that can connect to the internet then is our problem.
Yes.
Okay.
Honestly,
then that's not a drone problem. To be clear, I was just thinking okay, they take them over and crash a 16-ounce drone into a building, not terribly concerning to me. But if it's just, hey, any connected device that was manufactured by China is a problem, then we've got a lot of work to do.
Right, and look, I understand that I'm using devices as I sit here with my iPhone in my hand that are made in China. I get the hypocrisy there, but it's like for something like a cell phone, you're kind of limited in terms of what you can actually use that actually does the stuff you need to do. For drones, like, does anyone need a drone? Like, who's the person that needs a drone?
The laptop that you're working on right now, Chuck, what's the brand?
China.
Yeah.
I know. I get this.
Yeah.
I'm not happy about it.
Yeah.
But it's not really my choice. My point is, like, just because we've made these compromises in some places, should we just continue making them?
Yeah. No, I don't really think so. But I was just trying to lock in on the drone argument if it was something unique to that, and it appears not. I think
drones, I do think are like. I think it's a bigger risk, like from a national security perspective. Have you seen how warfare is conducted these days?
Yes. Yeah. Obviously, I have, and obviously, I want a robust drone industry in the United States that's capable of manufacturing these things. So, yeah.
Let's talk about something happier to finish the hour.
Oh, God.
No, we again, it's been a pretty happy hour, I think, Michael.
Yeah,
like my whole point is bad economic data doesn't matter right now.
Yeah.
So that's a pretty happy thought, I think. The FIFA World Cup giving a nice boost to the city of Boston. Obviously, you know, the whole country got a nice boost. But just in the second half of June, this is from the Boston Globe, Boston residents and visitors attending the World Cup-related events spent an estimated $83 million in the city and generated an extra $1.5 million in local tax revenue, according to preliminary data. And so I think this is great. And if you didn't have fun at the World Cup or surrounding it, I'm sorry, because it was just great. And I maintain that this might be one of the best summers we've had in recent memory. Let's take a quick break here, and when we come back, we got hour 2 coming up in a bit.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1-mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck, Mike, and Tucker with you here on a Friday, and markets are completely checked out for the weekend. Everyone's in the Hamptons. Where else do traders go aside from the Hamptons?
Nantucket.
That seems a little far.
Yeah.
Like it's a longer helicopter ride from
That's true.
From New York or Westchester County or
primarily just the Hamptons then.
Greenwich, you know. Hamptons. Hamptons. I've never been to the Hamptons.
Me neither. Huh?
It looks nice.
Probably never will.
We should go sometime. Can we do a remote from there?
Who's paying?
There's a lot of wealthy people
We
there.
sure
One
can.
of them.
It's going to be in February.
Yeah.
Still can't.
February in the Hamptons.
Still can't afford it.
It's true. It's we could do like we could like be in someone's like first floor bathroom or something like that. It's about as far as I think we could get.
Yeah.
So in any case, not really much going on in markets today. The S&P's down 8 points. Dow's off 67. Nasdaq's off 83. Again, just not much to write home about. 10-year Treasury's moving up a few basis points. It's fine. It went down a few yesterday. So again, we're just kind of treading water here, which is fine. Like I'm not complaining, but not every day has to be the most exciting one. What is interesting to me today, the one thing that caught my eye is so you've got rates moving up, but you got the dollar moving down, which always piques my interest when that happens. Dollar's off 0.42% to 99.44. Gold catching a bit of a bid as a result, up $18 an ounce to 44.39 after a couple days of weakness. Crude oil up 58 cents a barrel. Again, not much movement there. AAA gas prices, you've got the national average up 0.6 cents to 407 and 7/10. I will point out, diesel continues to move up. Diesel crack spreads are through the roof now touching $100 a barrel. Diesel's at 542 and 0.6. The all-time high is 581 and 0.5. So diesel prices continuing to move up. The other thing, and I know that people listen to our show from all over the country, but if you happen to live north of Pennsylvania, you've got like a 25% chance that your home is heated by home heating oil. For the rest of you, you're like, what is that? Like, what does that mean? Here's the deal. In the Northeast, about a quarter of homes, maybe a little less than that, are heated through a process by which a truck comes to your house, puts a hose into a hole in the side of it, and fills up a big oil tank, and then you burn that tank in order to generate the heat for your heating system in the winter.
You burn what's in the tank.
What's that?
You burn what's in the tank, not the
Yeah,
tank
you don't
itself.
burn the tank. No, the tank is engineered to not burn.
No.
That's why it's there. But so home heating oil, heats a large number of homes in the New England region. Again, about 20 to 25%, depending on the state. And the price of home heating oil trades almost in tandem with diesel. So what I got to tell you is, if the last time you filled up was like January or something, if we stay in this range and you need to fill up in the next couple months before the winter,
it's going to suck.
Potentially a rude awakening coming here. We'll see how these prices evolve. They could go down before that happens. They could go up, but just something that bears watching as we get towards the fall, which September is now 17 days away, Michael.
Yeah.
And I got to tell you,
Don't
September.
tell me that. I don't need to know that.
September's my favorite month of the year.
I couldn't disagree more.
Really?
Yeah.
What do you dislike about September?
Nothing. I just.
You said you couldn't disagree more.
Summer months all the way.
I am a big
It ranks
fall
like number
guy.
4 for me.
I am a big fall guy personally.
Yeah.
You got like those cool, crisp temperatures coming in. You got football on the television. You got wings cooking. I mean, it's a beautiful thing. And this is before you even get to like the fall holidays and stuff. I mean, like Thanksgiving, peak holiday in my opinion.
Yeah, famous September holiday.
I was saying fall, Michael, and we're on the path there. So, in any case, let's talk a little bit about the Los Angeles Lakers.
Okay.
Not the team on the court, because honestly, aside from Luka Doncic, I don't know anyone else on the team at this point. It's just I don't. Here's the deal. They got sold, or they're going to be sold, pending approval from the rest of the NBA owners, for $12.5 billion a year after they were bought. And again, like we can speculate as to the reasons for this. If you want, you can go online. There's plenty of speculation as to why this is happening. But the fact is, the team was bought for $10 billion a year ago and got sold for $12.5 billion this week. $2.5 billion profit on, a 25% gain in a year on an asset like that is pretty attractive. And it gets to the headline of this piece from Yahoo Sports. Lakers' $12.5 billion sale shows why private equity loves sports and won't leave. No, the reason that they won't leave is because we're at the point now where the price of these teams is high enough that the only groups that can afford it are either private equity consortiums or sovereign wealth funds. And that kind of sucks as a sports fan, to be honest.
Or Elon Musk. He could afford it.
Yeah, he could probably buy the entire NBA if he wanted
Yeah.
to. And still have money left over for the NHL, Major League Baseball. I don't think he could wrap the NFL into the whole thing.
Yeah.
But he could have 3 of the 4 major U.S. sports and then toss in MLS just for, kicks,
So
pun intended.
What about professional sports is appealing to private equity?
The return.
Yeah.
It's
I mean, that's always the
it's
return,
purely a
but-
supply and demand story. It's scarcity.
But it's not like you can consolidate, sports franchises in the way that you can, veterinarians' offices.
You don't
just
need to,
gut
though. They're already
spending.
consolidated.
Right.
Like the big thing is if you have 30 of these things that exist. Like think about this as like the Bitcoin argument, but it actually like makes sense and does something in the real world. If you think about it in terms of there's 30 of these things that exist, or 32 depending on the league. If there are more and more people getting very wealthy every year, they want to own the things that are scarce. It's why art has value. It's why, the Hamptons have value. It's like there's only one. Well, how many Hamptons are there?
One.
There's
one relevant one.
There's like 4, right? There's East Hampton. There's Southampton. Like
okay.
no, like there's they call
it's
it the
the
Hamptons
Hamptons,
because there's more than one.
Got it.
20
But in
to
any case,
22 municipalities?
22 municipalities. Do they all have Hampton in their name?
I don't know.
I don't think they do.
No, they don't.
See, that's a branding issue. But I digress.
You sure do.
In any case, the thing about these teams is there's only so many that to go around. So we do get to a point, though, where eventually the pricing gets so high that what's actually happening now, again, I said private equity consortiums. It used to be one private equity firm would go in and buy the team. Now you've got like 5 that get together that all own pieces of it because it's even big enough that not one can own it. And so a lot of the leagues have had to change rules to allow for multiple, private equity owners within a team, which wasn't, how it was before. it's dramatically different from even 15 or 20 years ago, where it would be, either A, like this family's owned the team in this region for like 60 years, or B, kind of the Bob Kraft story. Hey, local, season ticket holder makes it big and buys the team, and that's how it went. Those days are gone at this point.
Does that also bring you to the point where many private equity firms have ownership stakes in multiple different franchises in the same league?
Yes.
Is that allowed?
It is in some of them, not in all of them. I don't know which ones allow it specifically, and there's like limits as to the amount of ownership you can have in any one particular team in those cases, but this is where we're heading. And
sounds
I mean, here's
conflicted.
The thing. It's potentially, but it's not just, as you see, it's not like just small teams. The Yankees, the New York Yankees, New York Yankees are what, Tucker? Probably like a top 3 or 4 sports brand worldwide. Like basically like Yankees, Cowboys, Lakers, Manchester United.
Go overseas and look for a franchise's logo. I would imagine that the Yankees logo will be the most commonly one found.
I'm going like top 3 or 4. Like, again, you have plenty of like Cowboys ones. You got plenty of Lakers, but like top 3 or 4 sports franchise worldwide.
Yes.
They just took a $2.6 billion financing deal with Apollo.
Mm-hmm.
So, again, this deal, that was a combination of debt and equity. The New York Yankees are taking $2.6 billion of private equity money and private credit money. Like, that's the world that we live in now. I don't like it as a sports fan, but we're not going back. Like, there are no like individuals out there who are going to have the liquidity and wherewithal to do that, who actually care about it enough. Like for all we talk about, like Elon Musk, like there's like a dozen of those people, and there's tons of these teams. So I don't know. It's a new era. I don't love it, but it is what it is. Let's take a quick break. When we come back, any more sports, or are we done with that? Do we want to talk about how annoying it is to watch sports?
Yeah, it is. Let's
I
talk
love
about
doing
that next.
Let's do that. Tucker, do we also have some trivia that we're doing?
We do. Friday trivia.
Oh, boy. Can't wait. Let's take a quick break. We'll do trivia when we return.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
This is Mike Armstrong from the Armstrong Advisory Group. Our new guide, Navigating Retirement Housing Choices, can help you understand how your housing needs may change throughout retirement so you can plan ahead on your terms. Get your free copy by calling 800-393-4001 or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Who wants to play golf to support the Disabled American Veterans Department of Massachusetts? I know you do.
Let's do it for the DAV.
Mark your calendars. Monday, August 31st, Granite Links, Quincy, Massachusetts. A full day of golf and entertainment, and all to raise money for the Disabled American Veterans Department of Massachusetts. Let's go. DAVMA.org/event.
Let's do it for
DAVMA.org/event.
A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
The 2026 DAV 5K Boston set for Saturday, November 7th at Fort Independence on Castle Island. If you want to participate, now's the time to register. More than 1,000 runners have already signed up, making it the fastest registration pace in history. The event will be a sellout soon, so head to dav5k.boston for all the information on how you can take part. And if you can't, please consider making a donation. Your gifts help fund free rides to medical appointments for veterans in the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston. Time for Friday trivia here on the Financial Exchange, and the National Hurricane Center is currently tracking 2 storms in the Atlantic Ocean. They believe the closer storm is unlikely to become a hurricane, but the second storm has the conditions that could turn it into a strong hurricane. So our trivia question today, which hurricane was the costliest in U.S. history? Once again, which hurricane was the costliest in U.S. history? Be the 6th person today to text us at 617-362-1385 with the correct answer, along with keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the 6th correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
I actually just signed up for the DAV 5K myself.
Did you?
This week, yep. I'm going. So last year I finished in 1928. I'm going for sub 19 this year. We're gonna be cooking.
What place was that?
I finished 3rd in my age bracket, 16th overall.
Oh wow, that's impressive.
So,
if you want to beat Chuck,
yeah. If you want to try to beat me in a race, here's your chance.
Yeah.
Or if you want to say I raced Chuck and lost, here's your chance.
That's been my typical tagline.
So it should be fun. Piece in Bloomberg. It's never been more annoying and expensive to be a U.S. sports fan. It's true. It sucks. It really is just awful right now in that, like, even for one team's games, you need like 6 different subscriptions to watch every game. It used to be, when I was, a wee lad, it used to be, okay, big Boston Red Sox fan growing up. You needed 2 stations. One of them was free. Tucker, which one?
Wait, what? Say that again? What was...
Growing up, you needed 2 stations to be able to watch the Red Sox. One of them was free. What was the free one?
Fox.
Nope.
Fox.
Nope.
That was free.
Fox was not the standard for Red Sox games.
UPN?
Channel 38, correct. Okay. Free over the air. You didn't even need cable if you didn't want it. The one you did need cable for was Nesson. But either way, it was, okay, I'm going to turn on the TV, and Channel 38 has on the Red Sox, or it's on 51, which is Nesson. Easy. Today, hey, you want to watch the Red Sox game? Okay, great. Is it on Nesson? No. Okay, it must be on Fox because it's Saturday. No. Well, it must be on NBC because it's Sunday. No. Well, maybe it's on Apple TV because it's their game of the week. Maybe. Or it's on Peacock, or this one's on HBO. Like, it's ridiculous. And it's just getting to the point where it's annoying to watch sports. So I just don't do it if it's not on a free platform at this point.
I tend to do it the same way. I think it is really annoying to be a sports fan in your own hometown these days in terms of watching it. Very frustrating. Again, this comes to availability, and what people complain about is pricing, but 30 years ago, maybe it was, when did DirecTV come out? Early 90s?
Sure.
If I lived in Chicago and was a massive Red Sox fan in the 80s, I just couldn't watch the games, could I?
No, but that's fine.
Right. I guess my point would be it is very annoying now to be a sports fan in your own home city. It's pretty, dramatically better than it was in decades past if you are a sports fan living in somebody else's city.
Even there, it's not, though. That's the thing.
It's like annoying and costly, but it's at least available.
But it's worse, though, because even in another city, you still need like 8 subscriptions to get there.
Yeah, but at least I can actually have the availability of it.
So if we all just move, it'll be better.
No.
Oh.
I mean, did you see the NBA release yesterday, the schedule, Chuck?
Tucker. I looked at it, and I'm going, this is just not going to work for me.
Do you see every outlet that the primetime games are on? NBC, Netflix, Amazon Prime, Peacock. Like, ugh.
You need $50 a month in subscriptions just to watch the NBA.
The Celtics opener is on Amazon Prime on a Friday night. Like, what? What are we doing?
No, Tucker, not on a Friday night. It's on a Friday afternoon. It's at 3 o'clock.
Oh, no, I'm sorry. This home opener is on Friday.
Okay.
But the opener is on local TV, I think.
Who schedules a 3 o'clock opening game?
I don't hate it. It's good for me.
It's true. Yeah, it's not bad for you. So, I don't know. Like, look, ultimately, they must be making more money off of this stuff because they're doing it. But it's ruining the fan experience, and it's just frustrating when you get like all excited about a big game, and then you realize it's on Peacock, and you're like, well, I don't have a Peacock subscription, and I'm not getting one just for this game, so I guess I'm going to miss it. Like, it's...
Yeah, I wonder if this actually reaches a breaking point, or if they just are that powerful that they can just say, screw you.
Honestly, I'm very much starting to go in different directions with my sports viewing experience. Like, the stuff that's easy to watch, like, I'll give you just an example. I love the Boston Bruins. I can't watch them on TV because I'm not willing to pay for Nesson.
Yep.
I don't watch them.
I changed my streaming package so that I could get it.
I literally don't watch them on TV unless they're one of the national broadcasts.
Yep.
And, like, I'm at peace with that, but it's just how it is. Like, it's not worth it to me. Other than that, it's like, honestly, I go and I watch a lot more like local high school games of stuff, and it's great. Like, you get to see actually like people who care about it, and it's fun. I don't know. Let's take a quick break, and when we come back, we got Wall Street Watch, and we're joined. I was getting there, and we're joined by Susan Powers.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last-Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last-Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled Navigating Retirement Housing Choices. Mike, when we look at the considerations for people in their housing and retirement, one that comes up are these continuing care retirement communities, CCRCs, or age-in-place communities as they're known. How does someone make a decision about looking at one of those?
Well, I think the first, obviously you have to sort out your priorities, but the first thing is to think long-term about this. And what people sometimes overlook with these places is that term continuing care means that they adapt to your needs over time, but they do not just allow anyone in. In a lot of cases, they will have cognitive and physical tests that you need to pass in order to be accepted into these communities that then will provide all sorts of care later in life. And so I think early on is always better if you're considering that sort of thing.
The financial aspect of these also has a number of considerations as well in terms of what's actually affordable given your particular budget and liquidity.
Do I need a buy-in? Am I going to rent a place? What are my options for later in life? And then all sorts of tax considerations. Hey, I really want an income tax-free state. Well, is that worth it if I'm going to be paying more in property taxes given the composition of my assets and income? All of these really important considerations.
The guide this month is titled Navigating Retirement Housing Choices, and you've got a couple different ways to request it. First, you can call 800-393-4001. The second choice, you can go to armstrongadvisory.com and request it there. Again, that website is armstrongadvisory.com, or you can get it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are modestly lower following weaker than expected retail sales for the month of July, which pulled back 0.6% as consumers pulled back on purchases at online stores and auto dealers. Right now, the Dow's down about 0.2% or 96 points lower. S&P 500 down about 16 points, also down 0.2%. NASDAQ down about 0.5% to 134 points lower. Russell 2000 is up about 0.33%. 10-year Treasury yield up 4 basis points at 4.682%, and oil up about 0.5%, trading at $81 a barrel. Well, 2 years after its IPO, social media platform Reddit is officially joining the S&P 500, replacing Avalon Bay Communities on August 18th. Reddit rallying 14% on that news. Meanwhile, Applied Materials posted higher quarterly net income and increased revenue. However, the sales within its key semiconductor systems division only narrowly beat expectations, seemingly disappointing investors, with shares now down about 5%. And Workday retreating 4% after its 18% rally yesterday on the heels of a report from Reuters that private equity firm Silver Lake was in talks to buy the company. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question, which hurricane was the costliest in U.S. history? That would be Hurricane Katrina, which cost an estimated $200 billion in damages back in 2005. And Bill in Milton, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Bill. And we play trivia every Friday here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Joining us now is Susan Powers from the Armstrong Advisory Group. Just as a reminder, Susan is going to be hosting an event next Thursday, August 20th, out in Framingham at the Renaissance Hotel there, right off I-90, if you're familiar. 5 p.m. August 20th. More details to come, armstrongadvisory.com/events. But Susan, thanks for joining us. Appreciate it.
Happy to be here.
So you're going to be discussing Social Security with folks, and you're here for a little teaser, I guess, on the subject. So let's start with the very basics. What do you need to consider? Just, broad decisions when deciding just when to collect your Social Security benefit.
Well, there's a lot of things you need to consider, but kind of the main ones, if you're retiring and you need the money, you're going to claim it, right? That's just a fact of life. If you're single and you're in poor health, you're going to claim it. You're not worried about a survivor benefit. If you're married and in poor health, well, it depends. Do you need a larger survivor benefit for your spouse? Or do they have a larger benefit on their own? You want to claim it early. So those are kind of the major things to look at. Do you have assets they can bridge the gap by waiting? Or, you have to look at your true bottom line impact, because if you claim it early, there's going to be a permanent reduction to the amount that you receive for Social Security.
Right. Let's go further into the married couple conversation, because that's where most of us find ourselves, or married or divorced or somewhere in that category. So key considerations as a married couple trying to make the Social Security decision.
So if you are, maybe you have a lower earning spouse, maybe you don't qualify for a benefit on your own, you would get a spousal benefit. As long as you're at least 62 years old, you've been married for 1 year, and your spouse is on Social Security, then you would get a spousal benefit.
Okay, what's a spouse?
Depending upon the age that you collect at. If you wait until your full retirement age, you're going to get a 50% benefit. Your spouse is getting $4,000, you're going to get $2,000. If you claim that early, you're going to get about 25% less than that.
Okay.
So really depends upon that. Maybe you have a lower earning spouse that's going to claim at 62 for their own benefit. The higher earning spouse is going to claim at 70 so that they're getting the max benefit. Because when one of you dies, you're only keeping the higher of the benefits.
I know there's some confusing rules around divorce, as well as the survivor of a deceased spouse, a widow. Briefly, like some of the ins and outs of those rules, if you don't mind. I don't want to get too lost in the weeds here, but it's complicated.
The first factor you have to consider, you have to be married at least 10 years to qualify for a benefit if you are divorced.
Okay.
So that's right out of the gate. If you had been married for 10 years, you have to be 62. You cannot have been remarried before the age of 60. That's a big factor. So then you can look at that. If you're married after 60, you can look at the greater of your current spouse and your ex-spouse and
Some
see which one's
optionality
better.
there, okay.
You really do. If you have lost a spouse, and you can be as young as 60, subject to an earnings test, but you could take that benefit as young as 60. For widowers out there, you have different options for yourself. You could claim a spousal benefit and then switch over to your own benefit at age 70. You can claim a survivor benefit. You can claim your own benefit and then switch to a survivor benefit. So there's lots of things to consider.
One of the biggest complaints I hear is, my Social Security is getting taxed. I thought it was a whole tax to begin with.
Mm-hmm.
Talk to me about taxation of benefits here and what sort of planning you can do for that taxes.
Yeah, so you're taxed if you're single, you're making less than $25,000 a year, no tax.
Okay.
If you're between 25 and 34, 50% is going to be taxed, and anything over 34, 85% of your Social Security is going to be taxed.
Okay.
Married couples, those ranges go if you're making over 32, 50% taxed, over 44, 85% is taxed. I'm a silver linings girl. The good news is 15% of your Social Security is not taxed, regardless of your income.
On the taxation subject here, a little bit off the course here, but especially for folks here in Massachusetts and a few other states across the country, there used to be this rule or a series of rules called the WEP and the GPO. And now they're gone. And yet there are still a bunch of people that are probably eligible for Social Security that aren't yet aware of it. So we don't need to get deep into the weeds of how these rules work, but who should be aware of this right now?
If you are married or you're divorced and qualify or you are a survivor, if you never qualified for Social Security, let's say you have a government pension, you never worked in the private sector, you are not on the Social Security rolls. So if you were married, divorced, widowed, you should contact Social Security because now you may be eligible for a survivor benefit or a spousal benefit. So those folks have to reach out to Social Security to let them know, hey, I'm here. Do I qualify? I had a client, this happened to.
Leaving money on the table.
Leaving money on the table. She had a pension because she was a school teacher. She called them. She ended up getting a $3,000 a month benefit.
If you couldn't already tell, I can't say that without laughing. If you couldn't already tell, Social Security is complex.
It's clear as mud.
As is Medicare. There's a ton of different choices to be made on these subjects. There are potential pitfalls. There are potential advantages to different strategies that you can use when claiming your Social Security benefits. If you have these questions, the reason we are hosting this entire event is because we get more questions about these two government programs than just about anything else from pre-retirees. And a lot of the rules, as Susan said, clear as mud. We'd love for you to attend our free event. Registration ahead of time is required, but it's Thursday, August 20th, the Framingham Renaissance Hotel, right off the Mass Pike, if you're familiar with it. 5 p.m. next Thursday. Free to attend, but you must register ahead of time. 2 ways to do it. You can call our office, 800-393-4001. You can get more information at armstrongadvisory.com/events. But again, next Thursday, August 20th, 800-393-4001 for your free spot. Susan, thanks so much for joining us. Appreciate it.
Thanks
It's a
for
pleasure.
having
Have
me.
a great weekend.
Thank you.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
We are going to take a quick break here on the Financial Exchange. When we return, bit of stack roulette is next.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
All right, Michael, I'm going to do a little bit of stack roulette here. Mark Zuckerberg's AI manifesto is 6,500 words and barely says anything.
Saw this.
I mean, sometimes like Tucker puts something in the stack and he just knows that it's catnip for me. It's like it's just there. So so Mark Zuckerberg wrote a 6,500 word manifesto on AI, and basically. As you would expect, like it doesn't say anything. And I'll quote here from Brian Barrett from Wired, who was talking about this. It's marketing. What his marketing screed said is, hey, everybody, don't worry. AI's just fine. It's going to be great for you. Why is everybody so upset? Don't you trust us to make your life better? And the answer is, well, no. Like, you're Meta. You generally don't make our lives better. You don't respect our privacy. And no, like we don't trust you. But we still can't stop using Facebook and Instagram because it's really addictive. But no, we don't like you.
Full stop.
Yeah, I'm good.
Okay. Text line's been busy today, so I'm going to get to a few of them during roulette here. So one, somebody was bringing up recessions and the steak and eggs versus ham and eggs economy, which I like. I generally like weird recession indicators. It's one of my favorite things to look at. So there's famously the underwear index, like how frequently are men buying new underwear. Fidelity allegedly used to track the number of taxi cabs in New York City that were operating on a daily basis to try and get a gist for what's going on. I love weird recession indicators. I don't know if you have any others, Chuck, but the underwear one is always pretty funny for me. Another text about our drone conversation. So commercial and enterprise class drones are designed and manufactured in the U.S. However, consumer type drones made almost entirely outside the U.S. Somebody complimenting you, Chuck, on our semicolon conversations. The entire reason they apparently tune into the show in the first place is for silly conversations like that. And then a couple of texts just about the horribleness of TV these days and live sports, and everybody seems to agree with us there.
Good.
And I think it leads me to the one path where we are going back to the bundle, because one of the texts was, I don't watch live sports, yet they're adding them to all these streaming bundles that I love. So there's only one path, which is the price is going to go up for me, even though I don't watch any of the live sports that are being offered on Apple TV, for example. So, yeah, I agree with you. TV watching these days kind of stinks.
Yeah, Disney Plus has like the ESPN edition.
Yeah.
All that stuff.
Yeah. So there you have it. I'll also, if you don't mind, talk about pickleball, because the town of Mashpee just instituted a quiet ball rule on pickleball courts. And obviously with, pickleball fans being what they are, pretty loud objections coming from them. And this is one of those opportunities for just malicious compliance on the part of pickleball players, because I would imagine that there is no town rule, for instance, about clearing the court every morning with a gas-powered leaf blower or playing Insane Clown Posse on a loud boombox while you play pickleball, probably totally allowed.
Or no, I would be like, okay, fine, you want me to play with the quiet ball? I'm going to turn myself into Serena Williams.
Yeah.
I am going to just be like...
Some big grunts.
I am going to be grunting on every single ball I hit as loud as I can.
I was thinking about maybe I would just keep a supply of dying smoke detectors on the court at all times. That would be a good way to comply with this rule, because that's definitely not illegal. Maybe just back up a truck for the first hour of play.
Right, like exactly, things like that.
There's so many good opportunities here, Mashpee, to maliciously comply with these rules. Not that I don't find pickleball sound to be annoying, but it's not something that I would petition the town to make a new rule over, because there are plenty of annoying sounds that we all just need to learn to live with.
Like there's a pickleball court right near our office.
There is.
It's right next to our office.
Yep. In fact, it was the site of a pretty big controversy when somebody cut up all the pickleball.
Wait, what?
Nets.
Oh, that's right.
Like 2 years ago, someone came through one night and cut all the nets.
Okay, thanks. We'll get new ones.
Yeah, these are $20.
Like, imagine having
don't worry about it.
Imagine getting so upset about the sound of like a sport that you go and just try to ruin it for other people.
Yeah.
It takes exactly 18 minutes to replace these nets, but
Amazon will have this re-delivered to me in 45 minutes.
Like it's wild.
I also love the photo in this article of the guy, one of the residents in Mashpee.
The guy looks like Charlie Day with he's got like documents all over his house.
Yeah, but he also set up like this like very high-tech microphone with headphones on, and he's like trying to measure the decibels of the pickleball sound.
If you have to measure the sound, it's not that bad. I don't know, getting upset about living next to a pickleball court is like being upset that when you live next to Logan Airport, planes are taking off.
Yeah, I used to live next to a basketball court in Somerville. Guess what? People like to play basketball until midnight.
Right, it's fine. It's how it is.
They sell quiet basketballs now, Mike. They're
basketballs.
They do. They're foam.
You're kidding me.
No, but they're meant for indoor play. I'm just pointing it out.
quiet basketballs.
Just preposterous. So anyway, I've given you a number of different ways to maliciously comply with the new laws, Mashpee residents, and I suggest you take a look at a few of them.
Mike, I want to talk about this piece from the Wall Street Journal, the mystery vacations that give you no idea where you're actually going.
Love it.
I love this idea prior to me being an adult with children.
So I've done this once.
I remember you telling me about this.
When my wife and I, we were maybe 27 or 28. We didn't have kids yet. And we decided, we were like, you know what? Like, we've got nothing to do this weekend. We've saved a little money. Let's go to the airport and just get on the first flight and see what happens. And so we go to the airport, and it was kind of disappointing because the people at the airport were like, you guys can't buy a ticket here. We're like, we're at the airport. What do you mean we can't buy a ticket? They're like, you got to buy it online. So first it was like, okay, like this is kind of a letdown that you can't just buy a ticket at the ticket counter. Like they can make changes to your reservation, but you have to go like back behind the line and book it on your phone.
I'm also just imagining the TSA conversation these days, like, so you did pack your bag, but you came here not knowing where you're going.
So
extra screen.
So finally we're just like, okay, like whatever. Can you just tell us what like the next flight out is? They're like, sure, like here it is, because like we wanted to just do the next flight. This is how you end up in New Orleans in the middle of July.
Yeah, sure.
Which I don't recommend because about that packing issue, I did not pack 4 shirts per day to wear in New Orleans. Now, it was fantastic. Like, we had never been before. Like, we had a great time. Like, you know, it was awesome. But a little warm on the Mississippi River in, you know, mid to late July in New Orleans.
So the way this actually works is you book it sight unseen. They do tell you where you're going before you arrive at the airport.
It's through Groupon, though.
Which is a little disappointing.
I didn't know Groupon still existed.
News to me.
Yeah. Never have I been treated so poorly as walking into a restaurant with a Groupon.
Like, oh, this guy.
Nobody was happy about that situation.
No.
Groupon massage or something like that.
Yeah,
like,
like,
oh, jeez, this guy isn't going to give us any money.
God.
Nope,
It's like, look,
certainly
you guys
not.
You guys didn't have to offer it, you know? Like, if you didn't want me to come in with it, then you shouldn't have put it up. Like, no one made you sell the Groupon. But yes, I do agree. They did not enjoy that. We're going to take a quick break for the whole weekend. I hope you all get some pickleball in. I hope you all have maybe some fun trips planned. And use a semicolon or two. You might like it. We'll see you on Monday.